Welcome to TheoTrade. This is Don Kaufman. June 29th, 2022. 1 minute left inside of today's trading session with the S&Ps massively unchanged. But the topic of conversation is, are we headed for new lows in this marketplace? Let's jump right into it. One of the things that really surprised me in today's trading session. So it's just, chopped out slop type trade. And whenever I say like slop type trade, I'm talking about things like the advanced decline line. It's like a pure 50-50. The S&P is just oscillating back and forth. But the real standout, oh, look at some of these moves. Yeah, these are the S&P futures. This is not the Nasdaq. There's 10, 12, and 15-point moves inside of 1 minute. Say what you will. Like, oh, it was there's the closing bell. Say what you will. Like, oh, it was a really boring day in the marketplace here. Yeah, nevertheless, a lot of intraday traders that were just getting taken apart by what was unrelenting, vicious 1 minute moves seemingly out of nowhere. I mean, you're looking for like a catalyst in here. It didn't need a catalyst. Again, we broke lower. And just to give you a feel for some of the moves here, this is a 2 minute time window where we actually moved from roughly, call it 38.10 up to 38.30. I don't know, what's 20 S&P points amongst friends? And again, reversed a multitude of times only to see the S&Ps unchanged. But one of the most important kind of takeaways from today's trading session, we actually hit, spot on to the penny, the lower edge of the SPX expected move. Now, this is something that I bring up each and every week when I do the weekend update on a Friday afternoon or a Saturday morning. We talk just, incessantly. This entire past weekend video was about expected move and how we had, 4 recent breaches and 2 sigma breaches. But this week's expected move is roughly plus or minus $112. What did we do this morning? A few minutes into the trading day, tagged it. I mean, you just can't even imagine, okay? The marketplace, which is, $3,800 product, hit this line that we drew on a chart last Friday and literally, okay, almost to the penny, rips higher off of it, only to revert back down, touch, okay, the lower edge of the expected move a multitude of times. So in effect, this is what I say, we're home. But the remainder of the week, this Thursday, Friday, Thursday's got economic catalyst written all over it. So we're in an extremely precarious place right now for the S&Ps, right? So this relates to the S&P futures, it relates to the spiders, it relates to the SPX. When I say that we're in a precarious place, there's no question. You can bounce back up and we could be high-fiving one another to the upside, but there are some issues really in play. And one is that we're basically sitting right towards the lower edge of the expected move. You still have Thursday or Friday. If we're to break lower, the breach of the lower edge of expected move could be downright violent. I mean, everybody was talking last week. It was a magnificent rally. And yet most of that has already been given back. I mean, again, last week we started, down just south of 3,700. We ripped, just about, over 200 S&P handles, only to give back 100 of it in early trade this week. So again, we're bouncing all over the place, and this should make you feel a little bit uneasy. Now, the reason that I kind of question, are we about to, breach and go for new lows? It's not so much the S&Ps, just sitting on this lower edge of the expected move. What is disconcerting in the tape, the bonds, the bonds lately, they have not given us a wonderful feel, other than when we saw some of the recent really heavy sell side activity transpired, and I'm talking about back here, okay? There was buy side activity, okay, in the bond market. Now, again, we're looking back and, just what, 2 weeks ago, but we're only 2 weeks removed, in the S&Ps from what was hideous trade, right? So here we are in mid-June, big reactionary low, June 17th. Take a look at the bonds in a similar time frame, okay? On the 16th, all right, 17th, we were rallying considerably in bond markets. And this was, I think, that kind of quintessential, what we term risk on, risk off. So the S&Ps went completely and utterly risk off, and all of a sudden capital started flowing heavily into the bond market. My cause for concern is that today, specifically today, we saw kind of an outside move in the bond market. I mean, it's a 1.3%. It's a big boy move. It's not the biggest move we've seen recently. No, ironically, some of the bigger moves that we've seen recently were when the S&Ps were selling off. So the question at this point is the marketplace trying, okay, to hedge prior to a down move in the S&P futures. Now, just looking at the bonds, I don't think tells us much of anything. Really doesn't. That, though, when you start coupling it with the move in the dollar over the last 2 days, okay, now I've got my reservations in here. In addition to it, there is a sector that I've said time and again that will lead the S&Ps to new lows, and that sector has been the energy sector. So the energy sector, I fully anticipate energy breaking lower. Why? Economic slowdown. So the energy sector breaks lower. It doesn't necessarily mean that oil has to, follow suit. The energy sector itself, the Exxon Mobils, the ConocoPhillips, they, again, I would anticipate would see some sell side, a sign of economic slowdown. But ultimately, as the energy sector starts to sell, it'll start to pull the financials right along with it. We've got some sell side activity. And the interesting irony is, again, you see bonds bidding up, the financials are down, the energy sector is down, right? The dollar is considerably higher over here. All the pieces of the puzzle are there. That coupled with the fact that, we're sitting right towards the lower edge of the expected move. Now, do I anticipate we're just going to break lower and go for it and be trading 3,600 by tomorrow? No, I mean, come on, that's a 200-point decline inside of the S&Ps. Nevertheless, all right, just have to look at intraday trade today to recognize that volatility, okay, it refuses to subside. Last aspect, as I was saying, okay, I don't even care so much about the announcement that comes out, right? I mean, people are talking about it's monthly GDP, it's Chicago PMI, it's PPI. Like, listen, we are just chock filled with catalysts in trade, all right, tomorrow morning before the bell even goes off. That could be enough. And again, don't worry about what those numbers happen to be. I mean, a consumer confidence survey yesterday put us into a downward spiral. Can you imagine what real indicators coming out can do to the marketplace? This 50-50 advanced decline line could very rapidly correlate. You can see 100 products trading on one side or the other, but we're dangerous right now. And that's exactly the point that I want to leave you with tonight. Are we headed to new lows? Not necessarily in the next 2 trading sessions, but unequivocally, right? There is some big boy risk on the table just prior, okay, to significant catalysts tomorrow morning. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.